Hi and welcome to a quick video on property and investment. On this short video we're going to look at the advantages of investing in property and then the relative merits of investing in residential and commercial. So why should you invest in property as opposed to stocks and shares or any other form of investment? Well, the first reason is your money is secured in the property. There's bricks and mortars there that you can touch and feel. Whilst there has been deflation in house prices recently, you still have a property that's there. Obviously you insure it against unforeseen accidents, but basically you have something there that you can touch and feel, and your money is there. Property doubles every 10 years. Now, at the moment, you're probably thinking, no, it doesn't. It's plummeted, and depending where you are in the country will just depend upon where you are with house prices. The reality is that over the last 70 years or so, property has doubled every 7 years. So in saying every 10 years, we're being pessimistic. Also, whilst at the moment everyone thinks it's doom and gloom, that property has actually gone down in previous depressions, but has always come back up. If you look at house prices from the early 90s and see what the house prices are now, you will see that they have doubled. Rule of thumb, but it depends where you are in the country. Now this is an important item, and particularly when you look at return on investment, and I'll come to this in a later video, you can buy the property without using huge amounts of your own money. So if you look at that house on the screen, that's a little house in Fleetwood that I bought for 65,000, I think it was, of which 7,000 is mine and the rest is borrowed money. Okay, so let's look at residential as opposed to commercial. These are a few shots of different properties that we own. So one of the advantages of residential is it's a good return on investment. So I'll go into this in more fully in a later video and a report that I'm producing, but basically you get a much better return than certainly if you put your money in the bank at the moment, where you'd get maybe 0.5% or some such. You can get a much better return on property, particularly if you're using other people's money. But even using your own money, you get a much better return than you will do at the banks. Can give you positive cash flow. So again, particularly if it's your own money, you buy a property, rent it out, then the cash comes flowing in nicely, comes to you. You buy a house or a flat at the right price, and after you've paid your mortgage, on the assumption you use borrowed money, the money can still be more coming in than going out, and that's something that you need to look at very carefully with your portfolio overall, and where investors who have got into trouble in this recession, that's where they've fallen out. They've not looked at the cash flow. Buying your house, you're getting an appreciating asset, as we identified at the beginning, and there is strong demand, which of course brings about the increase in values of residential property. The strong demand is caused by the increasing requirement nationally that we have for property due to smaller housing units rather than population expansion. And particularly last 2 or 3 years, there's been very few houses built. Allegedly, there's a requirement for an increase in the housing stock of 200,000 per annum. Presently, very little is being built to meet that demand. People are obviously have difficulties at the moment getting a mortgage, and therefore renting a property is a great option for them, and that brings about the strong demand. Okay, let's take a quick look at commercial. This is obviously an office block that we own. Same principles applies to shops, warehouses and the like, although they all have their own particular bit. So, one of the things about commercial is you get an excellent return on investment. Your cash flow is wonderful. On a month by month basis, it is really a great investment. So, good positive cash flow. You put the money in or use borrowed money, and your yield for your investment is much higher than residential. But it can be a depreciating asset. The problem with commercial, and the building indicated there is a good example, whilst that is a relatively new office block, the sheeting has a life of somewhere between 15 and 25 years. Maybe get a bit longer out of it. You can put coatings on it and other things as it gets older, but it's not as resilient an asset as a house or a flat. And the demand can be limited. One of the issues with commercials is there's not the same demand that there is for residential, and so you have to be very careful where you pitch yourself in the market. If you look around at the moment, you will find lots of empty office blocks around, and they have been empty for long times, and lots of industrial buildings that are empty. They're in the wrong market. There are ways they can let them if they were to look at it, but their owners are either not interested or haven't thought of just looking outside the box. So demand can be limited. You have to be very careful, much more careful than you do with residential, although get it right and demand is strong. One of the problems with commercial is when the property is empty, even if only for a short time, there's no council tax exemption, and you still have to pay council tax. Now that has led to lots of buildings getting pulled down where there was very little chance of them being let, and so they've been pulled down to just become building plots, because then council tax isn't payable. Obviously you have a large block, be it a warehouse or whatever, and it can be big sums of money going out. So those are some of the advantages and the disadvantages of commercial compared to residential. Now that brings to an end this short slide. I hope you've enjoyed it. There's more to come, and this is just an overview. There's lots more detailed information coming. Thank you.